For what feels like forever, the digital world, code, clouds, and AI has been the star of the show. But a huge shift is happening, a rotation from the virtual back to the physical. This quote just nails the mood perfectly. While we were all looking at the next big thing in digital, a quiet revolution was starting. The smartest money isn't chasing the next chatbot anymore. Nope, it's flowing into things you can actually hold in your hand. So let's peel back the layers on what's being called the tech mirage. Because trust me, what you see on the surface, it's not the whole story. Some are calling it a Potemkin village, a beautiful false front, hiding a reality that's, well, a lot less impressive. If you just glanced at the S&P 500, you'd see this, a pretty respectable 17% gain. On the surface, you'd think, hey, everything's great. But that's just the official story. The reality is something else entirely. And yeah, this is a much better way to describe the market right now. It's this beautiful front that's hiding what's really going on inside. See, the growth isn't spread out, it's dangerously concentrated. This slide shows you the problem so clearly. The market's growth was pretty much manufactured by just a few giant companies, the so-called Magnificent Seven. If you take them out of the picture, the rest of the tech sector actually fell by 10%. Okay, so if tech is the fading star, what's taking its place? We're talking about a new, much harsher economic reality. We are entering what many are calling a war economy. The whole game has changed. Think about it. The pandemic economy was all about global cooperation against a virus. Now, in this war economy, the world is splintering. Nations aren't joining hands. They are hoarding resources and beefing up their defenses.
So how is this new economy creating winners? Well, the action is definitely in the physical world. A real gold rush has already begun.
And just look at gold's performance. It didn't just have a good year. It had its best year since 1979. We're talking skyrocketing over 72% and just smashing right through the $4,500 barrier. So, why the huge surge? You can think of gold as the ultimate panic button. Central banks are snapping it up to get away from a shaky US dollar. And at the same time, investors who are really worried about the Fed's unpredictable interest rate policies are also running to the safety of gold. And this right here, this just brilliantly shows that flight to safety. For years, we all heard that crypto was digital gold, but when the chips were down, the market chose very differently. The Nasdaq crypto index actually dropped 11%. It turns out, investors wanted an asset that survived empires, not just server farms.
But if gold is the king of this rally, then silver is the breakout hero. It didn't just rise, it absolutely exploded, surging an incredible 173%.
This quote explains the silver market perfectly. It really is like a bakery that suddenly runs out of flour. Silver is facing what's called a structural market deficit. That just means demand from both industry and investors is way bigger than our ability to actually mine it. The crucial point is right here in the math. Historically, it took 82 ounces of silver to buy 1 ounce of gold. Today, it only takes 57. This tightening ratio shows you that silver's value is climbing even faster than gold's. And we can't forget about copper. People call it Dr. Copper because its health kind of reflects the global economy. The red metal has jumped over 41%, another big sign that the market is betting on a future of building, defense, and scarcity.
Of course, no trend is without its risks. There are a few dark clouds that could definitely hang over this commodity parades, and it's important to understand them. There are really two main risks. First, a deep, nasty recession could absolutely crush industrial demand for materials like copper. And second, and this one is going to sound a little weird, peace is a risk. If global tensions were to suddenly cool off, that fear premium driving gold could just vanish.
Okay, let's bring this all together. What is the final verdict on this so-called great rotation? The market's future? Well, it's looking very specific. We seem to be looking at a K-shaped recovery. As this slide shows, it basically means one part of the economy, the tangible assets, the defense stuff, is going up, while another part, the world fueled by AI hype and cheap debt, is heading down.
Some analysts are even targeting 7,700 for the S&P 500 by 2026. But the real key takeaway is that the leadership torch is being passed from the tech giants to the miners and material producers. The companies that pull real stuff out of the ground.
So the takeaway here isn't to chase the echo of the last boom, but to start listening for the sound of the new one. Which leads to one final and really crucial question. Are you holding the right assets for what's coming next?